In the last month and a half, I've made $40,000 in prop firm payouts. And this year alone, I've made $80,000 in prop firm payouts. So I'm Jake, I'm a 20-year-old futures trader and I've been trading full time for a year now. And like I said, this year I've made $80,000 in prop firm payouts. So this series is going to be me documenting going from $80,000 in payouts this year and taking that to $150,000 in payouts this year. There are so many traders out there who make trading content, they claim to be a profitable trader, but they won't even show you a payout. And even if they do, they'll just show you one payout certificate. But none of these traders really have consistency, and trading is all about long-term gains and consistency. Now I'm starting this series to showcase that and scale even further. So now let's cut to the proof. So this here is my journal. So I post every single trade that I take in here. I also post it in my free Discord in the trade recap section, and I post my daily bias every single day so you guys know my thought process going into the trading day. So I'm going to be analyzing every single trade that I took in the last month and a half to get to $40,000 in payouts. But before I do that, let me show you some proof. So here are some payouts that I took in the last month and a half, and every single payout is taken by the trades that I'm about to show you. And there are so many traders out there who won't do this. They won't show you their payouts. They will claim to have taken a trade, they won't show executions, and they won't show you payouts. So now that you've seen the payout certificates, let's jump into the trades and have a look at what made me this $40,000. So the first trade that I took, we hit for a 1.33 RR, or 1.33%, and it was a 1 minute short after we swept a 5 and 15 minute high inside of a fair value gap. So let's take a look at it. So we swept this internal high here, which if we look on the 5 or the 15 minute time frame is also a high resting inside of this 15 minute fair value gap. So when we sweep a high resting inside of a fair value gap, we make a protected high. This is a really good place to put your stop loss, and it just means that the trade has a much higher probability of playing out. When you take trades, you want to be targeting low resistance liquidity, and you want to have your stop loss at high resistance. So this is one of the main reasons I aim to have my stop loss at the wick of the high, and it's simply because your stop loss is protected. You know, when we get the close back above the IFEG, I know a lot of IFEG traders will manually close here, but the trade is not yet invalidated, especially when it's a high inside of a fair value gap that we've swept. In other scenarios, I do understand it, but in this scenario here, it needs to be at the wick. If you start to do this and recognize when your high or low is protected, your win rate will massively improve. There are so many trades where they manually fail, but they're not actually a losing trade. So in this scenario, I targeted this low here, which was basically as we were tapping into the 5 minute gap, and my break even was this 1 minute swing low here. So I took this trade, and as soon as we swept this low here, I moved my stop loss to break even. I did think this was likely to be a break-even trade after that reaction off of the low, but we dumped straight back down and we came to full take profit. So I hit for a 1.3 RR. Now this was a really good way to start the month. After this we had a break-even trade, and this was actually a really brutal day because I took this 5 minute, and we will jump into it now and I'll show you why it was so brutal. So in this scenario here, this is the 5 minute time frame, and you can see that we swept this internal low, but when we go on the 30 minute time frame, you'll see that it's a low also resting inside of a 30 minute fair value gap. And although this liquidity is past the fair value gap, you'll see that it hasn't actually inversed it to the downside, so this is still very valid. As long as we can sweep the low and we still have time to respect the fair value gap, then it is completely fine to take. But you need to make sure that your trade is likely to sweep the low or the high, as well as respect the fair value gap that it's in. If we inverse the fair value gap to the downside on that higher time frame, then it's not a valid trade to take. That is a very key part of this model. So as soon as we sweep that liquidity and we see a really good reaction to the upside, we have that 5 minute displacement through the fair value gap, and I took the trade for just over a 1-to-1. So you may be asking why my stop loss in this scenario is at the bodies and not all the way down at the wicks. So when we sweep liquidity and make a wick that is massive like this and it's overextended, I am more than happy to have it at the bodies, but I will never have it any nearer. And in this scenario, I didn't mind having it at the bodies, one, because we made this 5 minute fair value gap on the way up. So if we were to come down, I'd want to see us rebalance into this fair value gap and then see that push up. So having it at the bodies is still in a safe area. And two, there's just no point in taking the trade if your stop loss is going to be that big, because a 1-to-1 is just so unachievable. So on this trade, I went for a 1-to-1 and my break even point was this high here. There was a few break even points that you could have had on this trade. So you could have had your break even at this high here too, or you could have had it at this swing high right at the top. So a lot of people did have it at the top here, and this may have saved them or it may have not. But in this scenario, I had it at this liquidity here because, as you can see, we have a 5-minute fair value gap here, and although it is small, we have bounced out of this fair value gap 3 separate times and failed to inverse it to the upside. So what's to say that we're not going to sweep this high and still respect the fair value gap and come for your stop loss? So although I do understand having it a bit higher, this just made sense for me on the day, and as you can see, we did come up, we swept that liquidity, and then I did get break even. In this scenario, if you did have it at this high here, it actually would have ended up playing out and you wouldn't have got break even, but I'm still happy with my break even. To me, it made sense, and I get that it is a bit near and you could have had it higher, but for me in this scenario, it did make sense for me to go break even there. So now on Wednesday the 3rd, we hit for 2.3R, which is massive. I don't usually go for trades that are over a 2.5R. It's rare that I even go for trades that are a 2R. The majority of my trades are around a 1-to-1, but today we hit for a very big trade. So I was very confident in the draw on liquidity. I'd called it out in my daily bias in the Discord, and we had that hourly swing low, so I was just looking for a trade down to it. So let's jump into the charts and have a look at this trade. So the majority of the time I will look for a higher time frame, low or high, inside of a fair value gap to be swept in order to take a trade. But when we have an A+ draw on liquidity, I'm happy to take it as long as we get a sweep of liquidity on the lower time frame. So usually I look for it on the 15-minute, the 30-minute, the 1 hour, the 4 hour, the daily. Those are the time frames I'm looking for that low in a fair value gap or high in a fair value gap to be swept. In this scenario where we had this hourly swing low, I was so confident in the draw on liquidity that I was more than happy to take a high in a fair value gap if we had swept something on the 1 to 5 minute time frame. Because I was so confident in it, I was happy to target it with my take profit, and I had my stop loss at the swing high. So the thing about this trade, it was a little bit more discretionary because we didn't sweep the most obvious high in a fair value gap. We only really swept this high that was sort of just making the fair value gap, but I was still more than happy to take it because I was so confident in our draw on liquidity. This isn't the type of trade I usually take, but as I say, it was very discretionary and I was just so confident in the draw. We did also come up and tap into a 3-minute, a 2-minute, and filled 50% of a 1-minute fair value gap, so there were some really nice confluences around this trade. So my break even was this swing low here. As soon as we sweep that, I'm going to move my stop loss to break even. I don't wait for a close back below it. So as soon as I took this trade, we started to fly down. We swept my break even point, so I moved my stop loss to break even. This is now a risk-free trade. We didn't go into any drawdown on this trade at all, and we literally flew down with no retracement, so we hit for full take profit for a 2.3R in literally 5 minutes. So this was another really good trade. After this, I was on holiday for the weekend and for the last 2 days of the week. I was in Ibiza, so I didn't end up trading. I can trade on holiday, but when I'm not at my setup and I'm just on my phone trading or on my Mac, I don't feel that I trade as well. So I felt that on holiday I was just going to enjoy it and not take any trades. There was actually an A+ trade to take on both days that would have played out, so it was a little bit frustrating to see that everyone took wins with the way that I trade on the Thursday and the Friday, because I would have been up over 5R this week. But you know, you have to enjoy your time, you have to use that freedom that you get with trading, so I don't regret it, but you know, it is frustrating. But I ended the week up this week on a 3.6R. Going into the next week, on Monday, we hit for 1.2R, and this was another really clean trade. So in this scenario, we had a 2 and a 3-minute IFEG. The 3-minute wasn't the biggest, but I still wait for the highest time frame, so I did take the 3-minute IFEG. And the reasoning I took this was because we came down and we swept a 15-minute low inside of a fair value gap, and at the same time we tapped into this next 15-minute fair value gap, so this was super clean. If you also look on the higher time frames, I'll show you the 30-minute. It was a 30-minute low in a fair value gap, and it was in this big fair value gap, so it was super clean to sweep that and look for a trade in the other direction. So my target was full take profit at this high. I never scale any partials, I just have a full take profit, and my break even was this swing high here. As soon as we did enter the trade, we did start to come into some drawdown, and a lot of IFEG traders would have been out of this trade if they manually closed, but our stop loss is still protected. There is no reason to be manually closing this trade, and as you can see, after that we fly up, we hit our break even point. I then move my stop loss to break even. This is now a risk-free trade. Full take profit is just there. We actually don't hit it here. I remember this happening in live time. We came like 0.25 of a point away from it, and I was thinking this is going to be brutal, but we actually did hit full take profit. So on Friday we took 2 break-even trades. Now my rule is I'm usually one and done for the day, but if we take a break-even trade, I am open to taking another as long as my mindset is still good and I'm still feeling good on the day. But whether I take a win or a loss, I am done for the day. It is only when I take a break even that I'm open to another. On this day, I was extremely bearish, and similar to the trade I showed you earlier where we hit for a 2.3R, we didn't have an insane sweep of a high and a fair value gap, but we put in this high here, we then came back down, and we then flew up, swept it, filled the whole of the fair value gap, and then displaced lower through this 1 minute fair value gap. As you can see here, the 1 minute was the highest time frame. We didn't have a 2 or a 3 minute fair value gap, it was just the 1 minute. When we look on the higher time frames here, you can see that we have this hourly swing low. So I'm bearish on the day because we've had an hourly IFEG to the downside just here. So I'm very bearish down to this hourly low, and I'm really expecting it to get hit. So this is a really good target for your take profit, or when we sweep it to then take a long off of. I took this trade for a 1-to-1. The hourly swing low is just marked here, so I would have liked to have targeted that, but the risk to reward was no good. So I thought I'm just going to go for a 1-to-1 slightly past it. And this is a day again where it's your own discretion where you go break even. I personally went break even at this swing low here. You could have gone break even at the hourly swing low, and this actually would have played out. So for me, I got break even, and if you waited for that hourly swing low, it would have played out and you would have hit take profit. For me on this day, I didn't do that, which is completely fine. And it's just one of those scenarios where I'm happy with my break even point, and yes, the outcome is unfortunate, but on another day this would have saved me. There have been a few scenarios, especially this month that I'm looking at now and the month before, where my break even hasn't really saved me and then it's flown to take profit after. And I've had a few questions about that, but long term, my model shows that having break even at swing lows and swing highs, and when we tap into fair value gaps and things like this, although sometimes it is near, your win rate is higher long term. Yes, it doesn't really feel like that when I'm going over it this month specifically, but long term data is what you need to rely on, and I don't have enough data on it to back that, okay, my break even should be down here. Like I said, when we then come down and sweep this hourly low, it is actually an hourly low inside of a fair value gap because we have not yet inversed this fair value gap to the downside. We also still have 12 minutes on this hourly close, so there is enough time for us to sweep it, see an IFEG back up, and still respect the fair value gap that the liquidity is inside of. After we swept that hourly low, we had another trade, and I was targeting these swing highs all the way up here, which was just over a 1-to-1. I did get break even on this trade again. We swept these two highs. There was a high here, you could have gone break even, or one here. I went break even at this high, which again was fairly near, and either way you would have got break even. After this, again, we did come up and fly to take profit. It did take a little bit of time, but we will get through it, and it did come to take profit. So again, this is just one of those days. I feel like this month specifically, there were so many trades that stopped me out of break even and then flew to take profit. And this is a common theme this month that you will see. But this is one of the only months that that's really happened to me, like I said. So there are so many months where this would have saved me and this would have been a loss. Going back to the journal, I was then on holiday again for the weekend, and I was on holiday for the 15th and the 16th. So again, I wasn't trading. Whether this saved me from a win or a loss, I'm not actually 100% sure. But either way, we ended the week up 1R because on Wednesday we took a very clean trade. So again, on Wednesday we come up and we sweep a 15-minute high resting inside of a fair value gap. So we sweep this high right here, and at the same time we have this fair value gap to the left, which has been tested multiple times. We tap into it, we sweep the high, and at the same time we respect the fair value gap. And I'm sure you're starting to see by now how simple this model is. It is very repeatable, and it happens every single day in the markets. This was one of the things I struggled with most, knowing what liquidity to take trades off of. This means your stop loss is protected, and you can take really, really good trades that are very high probability. After that, what do we get? We get a 2-minute IFEG. We inverse these two gaps that are stacked together, and I have my stop loss at the protected high. I just go for a 1-to-1, and again, my break even in this scenario is this swing low. And as you can see, we come down, we hit our break even point, and at the same time we hit our take profit. Again, another super clean trade that has left us up 1R on the week. Now we will go over the next few weeks, but I had 3 weeks in a row where I had 0R on the week. And me 2 years ago would have been crashing out. I wouldn't have been able to deal with this. I wouldn't have been able to have 3 break-even weeks in a row because my psychology wouldn't let me. So the fact that I've been able to sit on my hands has meant that I have months like this, and I have weeks where I am now up. So I've had 0R, 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 and then I've had 2R, and this week I'm currently up 1R. So, you know, you will never see the winning weeks because you will have weeks like this, but when you blow your account in slow weeks like this where you shouldn't be trading, you're never going to see the green weeks because you've made those mistakes. So we will look into it now, but yeah, I had 3 weeks that were 0R on the week. On the Monday, I had a break-even trade. On the Monday, we have this super clean trade again. We have this 1 minute IFEG. And why did I take this? Because we came down and we swept this 15-minute low, resting inside of a fair value gap. So at the same time as sweeping it, we're respecting the fair value gap. We have a 1 minute IFEG with really, really good displacement. So I take this trade, I have my stop loss at the protected low, and I am just going for a 1-to-1. And as I'm sure you guys know by now, my break even is at this swing high. And I genuinely think this was a really good break even point on this trade. And although, as you'll see here, we come up, we're almost about hit take profit, and we come down and get break even. We don't quite hit my stop loss where it is protected. And what do? We hit take profit. So a really brutal day, and like I said, you'll see a lot of these this month. I don't know why in particular this month there were just so many trades like this. I don't often get that, where you get break even and then it flies to take profit, but it has been a common theme in June. But it is what it is. I hopped off the charts after that because although it was a break-even trade, I just thought my psychology is probably, even if I think it's good right now, after something like that has happened where we've literally come a couple of points away from take profit, almost hit stop loss and then hit take profit, do I really want to trade after that? Probably not. We left it there for the day. We had no trades on Tuesday. We came back on Wednesday, and as you can see, I've got break even in brackets brutal written, and I will show you why. In this scenario here, we got a 1 minute IFEG to the downside, and like I said, we had a really good drawn liquidity below. I was very bearish on the day, and we came up and we swept this lower time frame high inside of a fair value gap, and at the same time as doing that, we respected the 3 minute fair value gap, and there may have also been, no, there wasn't a 5, but we respected the 3 minute fair value gap, and we saw a 1 minute IFEG to the downside. So I took the trade like this. I had my stop loss at the protected high, because even though it is a lower time frame, time is fractal, it is still a protected high. And I targeted this low here. My break even again was this swing low. But the brutal thing today was we came down, we sweep my break even point after a little bit of chop, which I held through. I moved to break even. I'm thinking, okay, I've got my camera up, thinking I'm recording take profit, we're about to hit it, and we miss it by a couple of points and we get break even. So again, there were literally no losses to take this month. This is one of my best trading months because there were no losses to take. Looking back over it, like if I didn't have a break even point at all, I would have made a serious amount of money this month. I mean, I still did, but I would have made even more. So it is frustrating, but my long-term stats say that break-even is way more profitable, and I get that there's going to be certain months like that, but people do this. You have a month where your strategy doesn't work very well, or you have a month where break-even doesn't work out for you very well, and you just get rid of it without having the long-term data on it. Since this, I've also gone over and back-tested my break-even specifically, and it is still way more profitable in the long run having a break-even point where I have it. So like I said, although it looks really brutal here and on some of the trades I've shown in this video, long term this is not the case. So 2 break-evens that week, and we ended the week up at 0R, and there were literally no trades the whole of the next week. This was a very hard week for me. I had to stay very patient, keep my discipline, and it's not easy to have a whole week where you take no trades and you're going to be break-even at the week because you literally haven't taken a trade, but you're preserving your capital for the weeks and the days where trading is higher probability and you are going to take a winning trade. After that, on the 8th, we took our first L that we took after a little bit of a win streak, and just not many trades, to be honest, that month. But the thing is, I didn't take many trades this month, but we took 1, 2, 3, 4, 5 wins before we even took a loss. So although there weren't that many trades to take, there weren't many losses to take, so you're still up a good amount on the month. What was this loss? Let's look over it. So L for me today took the 3 minute long, and I will show you what I did. So I was extremely bullish on this day. So as you guys know, I'm happy to take a lower time frame low inside of a fair value gap. So we have this 3 minute fair value gap. We sweep the 3 minute low inside of it. At the same time as doing that, we make a 3 minute IFEG. And although it is small, my sort of general rule of thumb is if the fair value gap's above 3 points, it's fine to take. And this was about 6 or 7 points. So I was happy to take the trade. Here's where we inversed. I was just going for a 1-to-1 again on this trade. My break even was these swing highs, but unfortunately in this scenario here, we didn't manage to come up to it, and we came straight down and hit my stop loss. Unfortunately in this trade, I'm not going to blame Trump or blame anything because I'm not one to be like that, but there was some really bearish war news that came out and we hit our stop loss. So Unfortunate, I didn't realise that it came out when I was in the trade. It wasn't sort of scheduled news. I saw it on Financial Juice after the trade. So it is an unfortunate one, but I would take the trade again, so it is what it is. Now, on the 9th, I did actually end up taking a win across all of my 13 accounts, as always, but what I didn't end up doing was taking this specific trade. So I know a lot of you guys and a lot of people are calling this the trade of the year, and genuinely I thought it was so A+. So we had a Judah swing off open. If you don't know what that is, it's basically just where we sort of fake out in one direction as soon as we open, and then we come up in the other direction, and then we continue in that direction. So we had this Judah swing, we came down and we swept a 5-minute low in a fair value gap, as well as tapping into some higher time frame fair value gaps. I had a call with the VIP students before this session, and I remember saying, like, I want to see this swept, and then I want to see an IFEG to the upside, which is exactly what happened. But we didn't see an IFEG on any time frame. This is all I wanted to see, just an IFEG like that, and we had it on the 30-second time frame. Me personally, I don't trade the 30-second. I find that there's too much going on, there's too many setups all the time. I find on the 1 to 5 minute really helps me not overtrade and not take bad setups. So it's just a rule of mine that I've always stuck to. I don't trade the 30-second, but if you did take this trade, it is super A+. And I agree with why people are saying this is maybe the trade of the year, because we flew up and it was extremely A+. With this trade, you could have targeted the 4-hour high, which I also called out in my daily bias. It was a 4-hour unmitigated gap, actually, just like so, and I did call this out in my daily bias, and I really wanted this trade. I was so bullish on the day, but yeah, as I say, we didn't get it. But I did not let this affect me. So later on in the session, we came down and swept this low that I was just talking about. So this low was actually a low we made at the start of the session, but as you can see, it was a 15-minute low inside of this 15-minute fair value gap. Straight away off of that, we saw a 1-minute IFEG. We had really good displacement, and we inversed through the gap here. So I took this trade and I hit a 1-to-1 risk to reward, just like so. I actually had my stop loss at the bodies here because I felt the wicks were a little bit overextended, and my break even was at this internal high here. So I took this trade. As soon as we hit my break even point, I obviously moved to break even, and then we hit full take profit. We ended that week up 0R again, because obviously we took one loss, which is -1R, and then we hit a 1-to-1 win, which was 1R up. Coming into the next week, this was a really good week, and with the VIP students, we all stayed really patient, which is so good to see. No one took any trades on Monday to Wednesday because there was simply nothing to take. There was nothing for the model. There was no losses, there was no breaking, there was no trades to take. We stayed patient until Thursday, and now we are on a 4-trade win streak because of that patience, you know. So we didn't force anything in these days, and then you reap the rewards of it after. So on Thursday, what did we take? We took this super clean short. On this day, again, I remember in the VIP call, I literally marked out this high and said, I want to see us come up to this high, Judah swing off open, and see a super clean short to the downside. So as soon as we hit this, which was also a 5-minute high in a fair value gap, as well as this 1-minute high in a fair value gap, we did actually have a 1-minute here, and I was really looking to take this. I was ready to press sell, but on the next candle we flew through it, and my break-even point would have been these lows. So the fact that we closed past my break-even, I wasn't comfortable taking this trade. Now we had a data low below, which I'll just zoom out to. So the trade idea was still very valid. As well as that, when we go on the higher time frame, we were very bearish, and we had this 1-hour swing low below, which I will mark out here. So we still had two really good targets to have as our take profit. So what did I do? I waited, I stayed patient, we looked for the highest time frame IFEG because the trade was still very valid, and as soon as we saw this, I actually alerted this in the VIP as well. I don't always do that, but I said, like, this short is so A+, you need to be taking this. So as you can see, the wick is overextended again. It's very far past our stop loss. It's basically double our stop loss. Now in this scenario, I did something that I don't always do, and what I did is I waited for price to tap back into where a 1-to-1 would be, with having the stop loss at the bodies and the take profit at the hourly low. As soon as we hit that with my limit, I took the trade and I went for a 1-to-1 with the low. This was still my break even point, and as you can see, I got tapped in there, moved my stop loss to break even as soon as we went below that low, and after that we then flew down to my take profit. So that was a really clean trade that I took on Thursday, and after that we had another super clean trade on Friday. Now the unfortunate thing about this, I'm going to be completely honest, because I was completely honest in my Discord, and I always aim to be super transparent. I really wanted to take this trade. I called this out in trade recaps for free in my Discord, and I said, like, I'm trying to take this 5-minute trade, and I physically can't. It wasn't letting me log into Tradeovate. Everyone had the same issue where they couldn't get into Tradeovate, and my lead accounts on Tradecopia, which is my trade copying platform, are my Tradeovate accounts, and the majority of my accounts, apart from TopStep, are Tradeovate accounts. So the fact that I couldn't enter the trade, I took it on paper and I said to everyone, this is a paper trade. And while I'm going to cry, I feel like I've had 5k taken out of my pocket because I physically couldn't take in the trade, and that would have been about 400 to 500 times 13 accounts. So why was this 5 minute long a super clean trade to take? When we look on the hourly time frame, it was a little bit far away, but we did sweep this hourly low inside of fair value gap, as well as sweeping that internal low. We also swept this hourly swing low that was just below it. So we almost had hourly relative equal lows that we have just swept, and those are at your stop loss. So our stop loss is very, very protected in this scenario. After that, I took this trade for a little bit over a 1-to-1 with this swing high here. It was about a 1.1. And my break even was at this swing high here, and I think this was a really, really good break even point. So we flew up towards my break even point, and I did not get break even in this scenario. We just came back down slightly, and then we flew to take profit. So we didn't really retrace at all in that trade. We just flew straight up to take profit, flew for our break even. And something that's a really nice confluence is when we're flying up like that towards your break even, you make a gap on the way up, which is a good point for us to retrace into and push price higher without getting break even. So on this day I caught 222 points, and I couldn't even take it on my account. So, you know, I had to have a think over the weekend and just come into the next week fresh, and that has now allowed me to take a win today when I'm filming this video, which is Monday. For today's trade, we had to stay really, really patient, and coming into the day, in the pre-market call, and I was actually live for today's session. So what I called out was that we had some stacked lows that I wanted to see swept. So we had a 30-minute low and a fair value gap here. We had a small 30-minute low and a fair value gap here, and we also had a 15-minute low inside of a fair value gap just here. So I was very bullish on this day, and off of open it looked like we were going to come up here. This was a daily unmitigated fair value gap, which is a really good target, so I was very bullish on the day. So we didn't quite take it, so I was still happy to be bullish. We came down, we swept our first low, which was the 30-minute low inside of a fair value gap. We did see an entry here on the 1 minute, but we didn't actually inverse the 2-minute time frame, so this was not a valid entry because I always wait for the highest time frame to inverse. After that, these are the trades I do not like, and people ask me about this all the time. So we have come back down, so we have swept our low in a fair value gap here. This low is now protected. We then have a possible setup. We don't inverse the 2-minute, fine. We then come back down, re-sweep the low that should be our protected low. I didn't expect price to trade back below that. And then people are saying, okay, we've had a 1 minute IFEG here. This looks like a good trade to take because we've swept liquidity. But no, firstly, you've come so near to our next target that your stop loss is not protected. We're likely going to want to come down and take this. And secondly, you are sweeping out this low that should be protected. This is not a good trade to take. After this happened, I waited patiently, and when we swept the 15-minute low in a fair value gap, we were maintaining the fair value gap and respecting it. We saw this really, really clean 1 minute IFEG back to the upside. So I took this trade. I actually just took this for a 1-to-1, even though on stream I did alert this trade and I said you can go for just over a 1-to-1 and go for a 1.5R to this swing high here. My break even was this swing high. I don't know why I went for a 1-to-1, being completely honest. I think maybe being on stream put a bit of pressure on me to sort of have a winning day and have a win on stream. So maybe that was it, and maybe that's why I scaled at a 1-to-1. A lot of you guys that were watching the stream, some of you did target a 2.5R all the way up here, and you did hit, and I think the majority of you did go for a 1.5R with this high, like I said. But I did scale my full position at a 1-to-1, and I'm never going to lie about stuff like that. I am always going to be transparent. So I scaled at a 1-to-1 there. But this was all called out on live stream, and this was the only trade of the day that I said this looks good to take. There was no other trade that I even signaled or took. So it was really good to stay patient, and yeah, a really, really good start to the week, because now we are up 1R this week, and we still have the whole rest of the week to see what we can achieve. So these videos will go live every single week on a Friday. I'm going to be posting one of these, and obviously this was a bit of a longer video. From now on, it's just going to be going over the trades that I've taken for the week. Now that we've done this sort of batch episode, so I'm really excited to get these out every single Friday. Make sure to subscribe so you don't miss out, and we're going to get to that 150k mark this year.